So I get a lot of questions from people on the channel asking when the best time is to refinance a car and also why you should be doing it. And so that's exactly what I'm going to cover in this video so that you guys can learn something new about when you should be refinancing your car and why. So stay tuned and we'll go through everything. So the first question of when you should refinance a car is very simple, and you can refinance your car tomorrow if you want to, and it really doesn't matter how long you've had the loan for. Now you're going to have to pay attention to two things here, and they are just the rate and then your credit score. That's all you really have to be paying attention to if you want to refinance your car. So the first one, your rate. This is what you want to pay attention to. If you feel like you have too high of a rate or that you can get a better rate right now, then you do want to be refinancing your car. The second thing is your credit score. So if you got a car 6 months ago and you've made all your payments on time and you feel that your credit score is a lot higher than it used to be, then definitely consider refinancing because you can always at least try to do it and see what happens. And also keep in mind that when you're refinancing a car, it is not nearly as complicated as refinancing a house. So this means there's generally no closing costs associated with refinancing, and a lot of the time it doesn't cost anything to do it. So if you can get a better rate, meaning an interest rate, or your credit score you feel is a lot higher and you can get a better rate because of that, then definitely consider refinancing because it's really easy and it's not nearly as complicated as doing it with your house. And then if for some reason you were told that you can't refinance your car for 6 months to a year, this is not true unless it's actually stated in your contract, which it probably isn't. So for instance, if your salesman told you you had to wait 6 months before you can refinance, don't listen to that unless it's actually in the contract. A lot of the time, the salesmen, they know that there's a back-end commission coming 6 months or a year from now. So they want you to keep that same loan so that they can get their small commission, but they're not telling you that. They're just making you feel like you're contractually obligated to not be able to refinance. And this is not true unless, once again, it's actually stated in the contract. So really, if you bought a car a week ago, you can refinance today if you really wanted to. Now, what I would recommend is if you are going to go refinance your car, I highly recommend that you check out your local credit unions and you check their advertised rates on the internet so you can see what to expect from all of the different credit unions. So for instance, the easiest way to do this is, let's say that you live in Georgia, just Google refinancing a car, Georgia credit union, and you can see what all of the different credit unions offer for your local area, and that's the easiest way to find the best rates locally for you. Now, if you do end up refinancing your car, just keep in mind that you are going to have what's called a hard credit pull, and this is negatively going to affect your credit score just for a little bit, but keep in mind this is totally normal for getting a loan because obviously the bank needs to know if you can pay them back. Now, if you are going to refinance, don't make this the reason why you don't refinance because your credit score is going to go back up eventually. I get a lot of comments of people saying that they don't want to refinance because they don't want to have their credit dinged. And this is just something that you need to completely ignore because if you are going to save money, then definitely just have your credit pulled. It's going to eventually go up. And I will explain a little bit more about this at the end of the video. Now, if you guys are liking this video, can you please just give it a big thumbs up? That way I can tell if you're liking this type of content. Thank you very much. Now, the next question we have is, why should I refinance my car? And this is very simple. It just has to do with two basic concepts, which is the fact that you can get a lower rate, you can lower your interest, so you're not going to pay as much to the bank for the loan. And then also, a lot of the time, you're going to end up with a lower payment, generally if you get a lower rate as well. Because a lot of the time when you have a car loan, you just generally don't think about the rate that you currently have on it. But right now, as I'm making this video, car loan interest rates are generally about 2 to 3% with optimal credit. So keep that in mind. If you have a 6% rate and your credit's pretty good, then you really could probably qualify for about a 2.5 to a 3% interest rate and save a lot of money on interest. And that's also going to make your payment go down as well. So let's say that you went out and got a car last month and you financed $20,000 and then you got an interest rate of 6% for 60 months. Now what this means is that you're going to have a payment of $387 a month, and in total you're going to pay $3,200 in interest over the entire term of the loan, which is a lot of money that you're just wasting and you're giving the bank just so you can have that car now. But let's say that you really could get a better rate than what you currently have at 6%. So tomorrow you go into your local credit union, you finance the $20,000, you end up with a 3% rate, and then you keep the 60-month term, Well, now your payment's only going to be $360 a month, but now the interest in total that you pay is only going to be about $1,500. So you're going to save a lot in interest. This is double in this case, just by refinancing, and you're also going to get that lower payment. Now, obviously, if you have a really big car loan, like for instance, if you're driving around in a brand new Escalade and you finance $90,000, then obviously going from a 6% rate to a 3% rate is going to save a ton of money. So just keep that in mind based on the amount on the loan. This is going to make those numbers change quite a bit. And obviously, if you have a 6% rate and you only go down to a 5% rate, but you only finance, let's say $6,000, that's really not going to save you that much money, but it's still probably worth the hassle, because any money that you save on interest is just more money that you can use throughout your life. You could pay more towards your car, you could just buy some more groceries. Anything is better than just giving it away to the bank, so keep that in mind. And I just want to be honest here, but if you are refinancing your car just to get a lower payment, please make sure that you're getting a better rate, because at the end of the day, if you went in and you had a 6% interest rate and then you extended your loan for another 2 years. So for instance, if you went from a 3-year loan to a 5-year loan and you kept the exact same interest rate, or it even went up, you are not going to save any money. You are going to have a lower payment, which sounds like you're saving money, but you're not. The interest rate has to go down in order for this to actually make sense. So what I would recommend you do is to focus on getting a better rate and then keep the same term that you're already on. So for instance, if you have 34 months left on your car and you go and refinance it, make sure that you're getting a better rate. And then because they don't have a 34-month loan, go with the 36-month loan, because that's close enough. And in this case, you are going to have a lower payment and you're going to save on interest. And this is exactly what you want to be doing. And even if the interest rate for a 36-month loan is exactly the same on a 60-month loan, just keep in mind that you are going to be paying more interest on the 60-month loan, because remember, you're paying interest on what you owe. So if you're spreading that out over 5 years versus 3, you're always going to pay more in interest because that loan has been extended for 2 years. So just keep that in mind as well. Cars depreciate way too fast on their own, so you always want to be paying off these loans as soon as you can. Don't be doing loans for higher than 60 months, because a lot of the time the car is going to depreciate faster than you can actually pay it off, and you're generally going to end up upside down in the car loan unless you had a ton down on the car when you originally bought it. So just remember that cars depreciate way too fast and you want to be paying those off as soon as you can. And then, like I said earlier, if you feel like you can get a better rate through your local credit union, or that you know that your credit score has gone up since the last time you checked it, you're probably going to end up getting a better rate and a lower payment. And what's the worst in trying? You could go into the bank, they could deny you, you can just move on with your life, but you can always keep trying to refinance your car in the future as long as your credit score has gone up and if interest rates have gone lower. Now, when you do go into refinance and you have your credit pulled, I have a video over here that explains the entire process so that you guys can learn more about that if you have an interest. Also, if you just found this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So if you do have an interest in this type of content, feel free to subscribe. But thank you for watching and have a great day.